Now it's time for compression. This is a very specific movement, and the intention is really similar, or not similar, same, when we are looking for equal highs and lows and the liquidity grab. This is to invite one side of the market. We'll not see this so often, but I will explain this on the M1 time frame actually. The compression is the move which I'm very often calling like the zigzag move. So in this case the price is going down to the demand zone from higher time frame. It's coming very slowly because there are a lot of ups and downs. So that's why I'm calling this zigzag move. A lot of weeks, and then is strong shot to the downside. Yes, this strong shot could be read by the beginner traders or retail traders as something to join at retest. So if we have the action like this, the price is compressing and then shot to the down, who knows how many people treated this as joining the sellers because of the strong move and breaking of this channel. And when you see the compression, it means that the opposite side of the market is preparing for their move. So if this is into the demand, please always really wait for the last push. It can be as a big candle, it can be also as a very high volume candle, and then is the true opposite direction. So for me, the complete compression is always with this last move with higher volume. In this case here, the move is also as a compression in my terminology. A lot of ups and downs, a lot of weeks, but here wasn't the last push to the upside. Even the price missed the supply zone. It was invitation for early sellers, but the high volume move, the last push was later. This very unclean compression, but I would not join the sellers here before touching the supply and before the last push. So this is the example on M5, but as I am trading only M1 time frame, I want to show you also example in this one. So the move here is also the compression and the final push, which is touching the supply. It's not exactly with my criteria, which I will share you later, because this is just a kiss of the lower edge of supply, but this is complete compression. This price is moving up and then the strong shot to the upside. But as I mentioned 2 minutes ago, we are not seeing the compression so often because this is not a pattern which is taking enough liquidity, because this is just inviting usually one side of the market. As price is specifically going in one direction, then there is a shot, and maybe retails try to join the direction of the last push. But here we have the equal lows as a support. So here was better chances to invite traders, yes, to manipulate them. At first as taking a buy, and then in panic to take a sell. So 2 times they could manipulate the traders. So that's why we see equal highs and lows as support and resistance often. The compression is just sometimes. That's because we are inviting just one side of the market to manipulate them. But it is good to know this pattern. I'm also using this. If I don't see complete compression, I am not taking the trade, even if this is really big fall, for example, from unfinished compression to the upside. If this is for like 20 or 40 pips, nothing bad. Yes, I'm very picky with my trades. I need to see the complete compression or equal highs lows with liquidity grab. So we can also call the last push from compression also as a liquidity grab. This is manipulation move. The last move is to invite the wrong side of traders, wrong side of the market. So I'm watching only on those two things, compression and support resistance, and this is my magic. Yes, this is working very well. So now, if you know about key levels, about supply and demand, where the liquidity is, if you know the not so popular pattern as compression, I want to explain the last thing as a market structure in next lesson. This is just about the terminology what I use, and then finally we will go to entries.